Hi, everyone. Welcome to our presentation today. We have Scott Alving of It Figures Tax Services, and Scott is going to be talking to us about how to avoid issues with the IRS, common issues that businesses have. We have closed caption below for folks who need that. Please feel free to use that button. And so the presentation today will be recorded and will be available on our YouTube channel for our membership to access. And if you have any questions throughout the presentation, we ask that you pop them into the Q&A. If you go to the bottom of your screen with your cursor, you will see that there's a Q&A that you can press, and then you can pop your questions in there, and Scott will address them at the end of the presentation. Michael will help read those out. You can submit them anonymously if you would prefer. And yeah, so without further ado, Scott, I will pass it on to you. Thank you again for being here today. Thank you for offering this to your fellow chamber members. We really appreciate it.
All right, thank you. Thank you for having me. It was a lot of fun putting it together. So what we're going to do is do a little screen share. Let's try this right now. All right, can everyone see that? All right.
Yes, and then sorry, Michael here from the chamber. Real quick, Scott,
okay.
Before we get started, we just got a quick question that I wanted to get out ahead of. Joanne is asking if a link to the slides will be sent out as well after the presentation.
Sure, I can do that.
Perfect, thank you.
Yep. All right, so I'm Scott Alving, I own It Figures Tax Services, and I deal a lot with people with issues and business owners and issues with the IRS and the state. Actually, I need the 50 states. So the chamber here has asked me to give you a 10,000 foot view of some of the issues people and businesses encounter with the IRS. So with that, I'll give you a quick about me, nothing major. I have a bachelor's in management accounting. I previously worked in corporate accounting and left after I got 2 neckties caught in a shredder. Yes, that is true. Me and the neckties and shredders do not work. That's why I don't wear neckties. Why I went to the field to help people with the IRS is because I did own a bookstore. I had a payroll tax issue of $25, and because of all the bureaucracy, they weren't going to renew my license. So I gave them the 25 bucks, and that's when I decided to jump into the arena and helping people with the IRS. I opened my practice in 2023. I launched it full-time in 2009. I also bought out my previous employer. I live in Stowe with my husband, 2 kids, 2 cats, and 30 chickens. And spare time, I like to kickbox, hike, being outdoors, read, cook, host get-togethers, and hang out with family and friends. So we got one question, and see if you can answer it at the end of it. And what's the one thing we cannot purchase or renew? Okay, so we'll answer the question later, or see if you can remember. You know the answer. What is the one thing we cannot purchase or renew? So one of the first things I encounter is, the main thing I encounter with the IRS is non-filing. Yes, there are people out there, business out there, who have not filed in over a year. It's common. I see a lot of it every year. I have 4 cases on my desk, people who haven't filed. So for a business owner, the biggest thing is, I will say the biggest way to prevent non-filing is get a bookkeeper, okay? It's not so expensive. They can help you clean up your books, okay? And when I say clean up your books, make sure they're accurate, not riddled with falsehoods. For example, I've had a contractor trying to deduct the pool in his backyard. $35,000, he owed $38,000. If he didn't spend the $35,000 in the pool, he could have paid the taxes. And now he's in a world of doo-doo. All right. The other thing is paying under the table. Since I'm licensed with the IRS, I don't deal with that crap because you're probably in my office because of that stuff. So they can help you. Like I said, money and cash is a legal currency. You can pay people in cash. Send out the 1099s. Now you're compliant. Okay. The bookkeeper can help you do that stuff. Accounting software, they can navigate it, whether it be Xero, QuickBooks Desktop, whatever. They can navigate the accounting software, and the owner doesn't have to sit there and try to do it. Getting a bookkeeper, if they have good bookkeeping, it allows the owner to make some good decisions, good financial decisions. What are we spending the money on? Is it worth it? Is it not worth it? Where's the money coming from? Where's the income? Who's our customers? Some of the things these bookkeepers should be doing: payroll, invoicing, pay the bills, financials, dealing with Quest, which is the state of Massachusetts, the unemployment division, filing the sales and meals tax, QuickBooks navigation, like I mentioned, and doing the 1099s. Okay. They should also be helping you with those one-off projects like the PPP loans we've just been through, and any other kind of miscellaneous projects that require knowledge of the business finances. I say the bookkeeper because it helps the owner run his business, okay? And helps you file the tax returns that you're supposed to be filing, which we'll jump into in a second. Some of the security for bookkeepers, yeah, they should have some security, is it helps prevent the sticky fingers and then the embezzlement. So in the beginning, don't let them sign checks. The owner should be signing the checks. Don't give them online access to the bank account. The owner should have online access, because the owner should be checking the bank statements and or looking online on a regular basis for the bank accounts, the credit card accounts. And they should be having monthly financial meetings with the bookkeeper to see the health of the business. Okay. So that's one of the ways you can avoid not filing, because the bookkeeper will have this stuff done and we can file the payroll tax returns and the business return timely. All right, we've talked about payroll. We'll kind of peruse real quick through it. Get a reputable insured payroll company. Bookkeepers can do payroll. I prefer not have them not do it because it's tedious. Let the payroll companies do it because they've got it automated. Okay, because if the bookkeeper forgets to file some of these forms, many of the payroll tax forms like the 941, the 940, the W-2s, 1099s, fails to file with Quest. Now you have retention credits because of COVID. They have to sign up with Mass Tax Connect. You might even have multi-state payroll. It's a lot to do with payroll. So if the bookkeeper is not up to par with it, it can get very messy. So once again, get a payroll service. It's not that expensive. Okay. So if you do your own payroll and you fail to file, the penalties are about 5% a month to a maximum of 25% of the unpaid payroll taxes. And then if you don't deposit on time, once again, the penalty is 2 to 15% of what you were supposed to file to deposit for the payroll taxes. So once again, with the non-filing, the penalties start. And with penalties starting, you have less cash, especially with a new business, when you need that cash and you're giving it to the government. Another thing I see, especially with the sole proprietors and partnerships and single member LLCs, as I see this a lot, is estimates. They don't pay them. So what happens is, first little point is to pay them. What you're going to see is when you open up a new business and you don't have a tax professional to work with, and you just open it up, I'm ready to go. I've got the tools I need. I've opened up the doors. I'm running, and all these the money's coming in, but I didn't talk to the tax person, the CPA, EA, whoever you're going to use to do the taxes, and you didn't get a plan. So what happens is when you file at the end of the year, you're going to say, uh-oh, I owe this much, and the snowball starts because you start owing. You've spent the money on other things, hopefully not toys, but you've spent it on, the materials you need for the business. You're going to see this bill, and then now you got to deal with the bill, okay? And then you got to meet payroll, and you got to meet all these other things because you forgot to pay the estimates. You forgot to talk to Uncle Sam, unfortunately. Usually I tell people, check at the end of the year. If you've opened up in the third and fourth quarter of that year, check with your tax professional, plan ahead, and get the estimates under control. If you think you're operating at a loss, once again, check with your tax professional. Make sure you're legitimately operating at a loss, and that loss can be dealt with and used to your advantage. Once again, do what I recommended, get the estimates under control so you don't have the sticker shock at the tax season and you don't have the tax bill. So what happens when you ignore the other things I said to do? What you can do is, I'm just checking the time. We'll avoid that. Okay, let's just move past the next couple slides because I know we're going to start running out of time. There is some different type of entity structures, and they're used to protect it. You can protect your business legally, but it's also a good way to save on taxes. So easiest way, you've heard it a lot, is the DBA / the sole proprietor. It's the easiest to form. Once again, you get into you have to deal with the estimates because it also goes on your personal return. It's a schedule business, so it does go on your personal return. You're going to have a draw. You will not have a W-2. And for those who are DBA and a sole proprietor, you're going to see your Schedule C on your personal tax return. So this all goes on your personal return. It's not a separate return, okay? It's the easiest to form. You will pay the most in taxes, okay? The next one, like I said, this is entity structure. It's going to be a lot to comprehend. We're not worried about it too much, but I'm giving you the basics of certain ways to do certain things with the IRS to avoid some of the taxes. But in some cases, it's more filing. Okay, so in some cases, there is extra returns to do. For example, the partnership, also the multi-member LLC. It is a separate return. Okay, it's a Form 1065 in addition to your personal return. You need an EIN. You're going to pay self-employment tax. There is, once again, owner draw. There is no W-2 for the owners. Once again, you fall into the world of estimates. Got to pay the estimates. You have your articles of organization, okay? And if the Form 1065, your partnership return, it is an informational return. For the most part, the information return, the partnership return does not pay the tax. The members do, okay? The members of the partnership pay the tax. But if you forget to file your partnership return, there's a late filing penalty, and it's $205 a month, times the shareholders, times the number of shareholders, up to 12 months. And there's more information returns than that, and it's a K1. Once again, more penalties if you don't file on time. And that's $270 for each K1 you did not file. So there's going to be, like I said, there's going to be a lot in the entities. We're skimming the surface of them. There's a lot more to talk about with the entities, but it's more of a tax planning thing. But these are just some of the things, once again, to avoid not doing, to avoid doing or not doing, so you can avoid the IRS. Because like I said, I see this a lot in my office. Once again, the other entity you have is a C corporation. Separate return. It's a legal entity all on its own. In this case, the shareholders do get a W-2. There is a form of double taxation. The corporation pays tax on the income tax. Shareholders will pay tax at dividend rates if they get any extra money above and beyond their W-2. You get your articles of incorporation. Once again, you're going to have an annual report with the Secretary of State for the state you're in. File it. that leads to other problems down the road if you don't file those annual reports. And that's with banks. If you want to take out a loan and you don't have your annual reports filed, they're going to make you file. And with Secretary of State, Massachusetts, if you don't file them within 2 years, they dissolve the corporation. So then there's another whole leg of time you got to spend and undissolve your corporation. And they have a late filing fee as well. It's 5% per month of an unpaid balance, maximum of 25%. There's also a 5% non-payment penalty for not paying the tax, because the corporation will pay the tax per month, maximum of 25%. So in the corporation, I've said that the corporation is paying the tax. All these other entities, the DBA, the partnership, the Escort, the shareholder pays the tax, not the corporation. So in this case, the C Corp will pay the tax. So that's why they have a non-payment penalty. And the last kind of entity you have is the C Corp, the S Corp. And once again, it's a separate return. It's a Form 1120S. It's going to get a K1. Those are all informational returns. And once again, penalties will apply if you have not filed them on time. The shareholders get a W-2, but unlike the S Corp, like I just mentioned, the S Corp doesn't pay the tax. The shareholders pay the tax at their income tax rate. The nice thing about the S Corp, for those who are in business, you've all heard of this self-employment tax. If you haven't, you have a question, we'll tackle that at the end. And the self-employment tax is basically your Social Security and your Medicare tax. The S Corp can avoid paying that on the income versus the partnership and the DBAs and the sole proprietors. You pay the self-employment tax on the full boat. Okay. We won't cover this piece, but there's something to think about is watch your basis. Okay. It's your equity in the business. The IRS is looking at this as well. Since the Trump administration, the IRS is starting to clamp down on certain parts of the businesses, and basis is one of them. So people who are partners in partnerships or multi-member LLCs and shareholders of S Corps, you have to start thinking about your basis. Talk to your tax professional about basis. Once again, yearly annual report, file it with the Secretary of State. A lot of S Corps, C Corps, multi-member LLCs, single member LLCs. If you don't file those annual reports and you go for a bank loan for whatever it is, they look for this. If you don't have the bank loan, you won't get the bank loan if your corporation or entity has been dissolved because you have not filed those annual reports. Once again, your bookkeeper should be able to help you file the annual reports. If you don't file it on time, once again, there's a late filing fee, $205 a month, times the number of shareholders up to 12 months. And once again, it's $270 for a K1 that has not been filed on time. So as you can see, there's a lot of different entities. They all have non-filing penalties, late filing penalties, and those penalties, as you can start to see, is going to add up. So if you're a new business, you don't want the added expense of all these penalties when you're trying to make a successful business. So how does this all prevent the IRS issues and other issues in general? Once again, we've just talked to you about helps prevent you from filing late and incurring penalties and interest. If you're a new business, you do want to preserve that cash so you can grow the business and not give it to Uncle Sam. The right entity selection can help you save on those taxes. Like I said, when you're a sole proprietor and you're a partnership, multi-member LLC, or a single member LLC, you get to pay that self-employment tax. With an S Corp, you can avoid some of that. All right, but if you go to the C Corp, you could be paying more. So it depends on what you're looking for the entity structure and how it will affect the taxes you pay. Payroll. The payroll company can help you avoid the payroll tax nightmare. And that is because when you're a new business, cash is usually pretty tight. When you do your own payroll, you have to make payroll tax deposits, either monthly or twice a month. If you don't have the cash right then and there, a lot of business owners will say, I'll pay it next month. Well, next month shows up and you have to owe and put the tax deposit in for that month, but you also owe for the previous month. So now the snowball is starting and the bill is going to start getting bigger and bigger. And then you failed to file deposit on time. Hopefully you filed, and you've now racked up more penalties in addition to the 2 months you now owe for the deposit for the payroll taxes. So the payroll company runs, maybe depending on the amount of people and the frequency, it could run $1,200, $1,500 a year, maybe 2,000. Like I said, depends on the frequency, but it's going to help you avoid the payroll tax nightmare. It's going to help you help you avoid sitting in my office so we can clean up the mess. The payroll taxes will be paid, and that is 50% of the US government's money. They go after the payroll taxes very harsh, very quickly, and the payroll penalties, as you've seen, is pretty harsh, and they can make your life pretty miserable because they want the payroll tax money. Their idea is it's trust fund money. You as the owner paid these people and you were supposed to remit it to the government. It's not your money, it's the government's money. So it keeps you compliant, keeps the IRS happy, pretty much will keep the IRS away from you. So this is a lot to absorb in, say, right now we're at 25 minutes. It's a lot to absorb. There's plenty of time for questions and answers. But if you get a bookkeeper and you talk to a tax professional beforehand, it will help alleviate a lot of the problems that will come down the road. Like I said, I've just mentioned the non-filer because that's one of the biggest problems we see is non-filing. There's other ones, but it's mostly from individuals, innocent spouse, things of that nature. So this is what you'll see mostly in a business. And so earlier I said, this is more of a little bit of a joke. What was the one thing you cannot purchase and or renew? And since we're doing it this way, I can't see answers. Well, the answer is going to, look, Michael's coming in.
Hi there. Yeah. So just popping on to let everyone know if you have an answer to the question or if you want to put your own question in Q&A, feel free to do so. There aren't any responses yet, Scott. So if you want to proceed.
All right. So I'll just go. The answer is basically time. Okay. Why did I ask the question? Why did I give you the answer? Because what happens is all the stuff we just talked about is a time saver for the business owner. Hiring the bookkeeper, so the business owner doesn't have to do the bookkeeping or try to figure out how to do the bookkeeping. Getting it filed on time, talking to the tax professional. You don't have to spend all that extra time worrying about this. If you get everything filed on time, you don't have to spend endless nights up at night. Whoops, there you go. Because you need to run a business. You don't need to sit behind the desk doing the books. Okay. Most of the time, if you're a business owner, you're not going to have time to do the bookkeeping. You won't have to spend the year end scrambling to get caught up with the bookkeeping. And there's that whole thing of spending time with spouse and family. A lot of business owners say, what's that? And I hear that a lot. It causes a lot of divorces, a lot of excuses. I promise next time we'll do it because I got to go back and do the bookkeeping because I got to run the business. And there's always the technology issues. Okay. Something blows up. You got to spend time with that. And if you haven't backed it up, bookkeeping gets screwed up and the whole snowball effect. when you open up a business, you're going to screw up. I have, everyone else has. Learn from the mistakes. If you have an issue with the IRS, learn from the mistake. We can get you out of it. And the thing is, if you do some of this planning ahead of time, you're going to have the extra time by not being in in my office, bailing your ass out of the hot water from the IRS. Okay, so plan ahead. Get some of those basic things we just quickly talked about done, because once again, the non-filer is the biggest problem the IRS has. They have identified over 10 million people and businesses that have not filed in over 2 years. And they've started to put the technology together that they're going to start finding all those non-filers. We've had 3 people come in with notices. So they are finding it. It's only a matter of time. What the amount of time is, I don't know. But they will find most people, because a lot of those forms, those informational forms, the payroll tax forms, they all have EIN numbers. They're all attached to you as the business owner. So with that being said, that's pretty much the presentation. I made it quick. Like I said, we did go kind of quick. There is a lot of information in there. I could keep going, but like I said, with 1 hour, I want to leave enough time for questions and answers.
Hi, everyone. Michael again here from the chamber. Like I said, if you have any questions, you can use the Q&A function. One cool thing about that function is you are able to submit anonymously. So if you have a question that's maybe a bit more, I don't know, if it's all about taxes and finances, right? So you have a question that you don't want to be publicly connected to, feel free to submit it anonymously and I will read it out. And we have a question. If I am a sole proprietor but wanted to avoid self-employment fees / taxes, is there any downside to registering as an Escort?
No. So what you would do is, if you're a DBA and you want to avoid paying some of those self-employment taxes, yes, you can do one of 2 things. You can go to the Secretary of State and legitimately become an Escort, okay? Or another way to do it is, the IRS has a little election. It's a piece of paper, you send it in, and you can elect to be taxed as an S-Corp, okay? So you will be Joe Schmo, DBA, doing business as the bakery down the street, but you can be taxed as an S-Corp, but you still are a DBA. Legally, you are not an S-Corp. Okay, because you are doing the election. And then what will happen is, you'll have 2 tax returns. You have your S-Corp return, which is the informational return, and you have your regular personal return. But if you're going to be taxed as an S-Corp, you fall into the realm of being an S-Corp tax-wise. You got to do payroll. You got to file the Form 1120S, which is the S-Corp return. You got to do K-1s. So as far as the IRS is concerned, you are an S-Corp. And that is also the same with Massachusetts. So if you elect to become an S-Corp, you are elected in Massachusetts as well. So you have to file the S-Corp in Massachusetts as well. So what will happen is, you get your W-2, you pay your Social Security and Medicare on your W-2 wages. The S-Corp matches them. And then any of the income left over from the end of the year, that is, you pay your state income tax and you pay your federal income tax, but you avoid the self-employment tax on the income. You cannot avoid the self-employment tax. I mean, your Medicare and Social Security, you cannot avoid it on your W-2 wages.
Perfect, thank you. Next question is it better to be an LLC or an S-Corp?
I guess I'd ask back, what is your purpose? Is it because there is, for benefits, like if you need health insurance and health savings accounts, health reimbursement accounts, and all that stuff, the big one is health insurance. Sometimes it's better to be an S-Corp versus a LLC, or even a multi-member LLC. But for tax-wise, it's going to be the S Corp because you're going to save on that self-employment tax. LLCs, whether they be single member or multi-member LLCs, all that income is subject to the self-employment tax. So for tax-wise, it's better in that case to do an S Corp. But if you're looking for benefits, the S Corp is slightly better, but if it's going to be for benefits, it's a C Corp.
Perfect, thank you. What happens if you get in trouble for not paying? What's the process to fix it? That's a big one.
Okay, so the process, if you forget to pay what are we forgetting? Can we be more specific?
Yeah, if that person could follow up. I'm assuming they mean proper taxes, but if they have a more specific type of tax they want to shoot another message, let me know.
Okay. Yeah, so was the question filing or not paying?
I'm waiting to see if they
Okay.
Taxes, yes, not paying your taxes.
Not paying the taxes.
Okay.
All right, so what normally happens is we'll say LLCs, sole proprietors, multi-member LLCs, S Corps, because the shareholders and the members and the individuals have to pay the tax. So if you went to the tax person, you got your taxes done, and you're like, oh shit, okay, I have this huge amount of money I got to pay. What I normally do is turn around and say, let's get everything up to date. Okay, let's get all your bookkeeping done. Let's put you on an estimate for the current year. Take the bill that we owe or you owe. If you can't pay it, we take that amount and put you on an installment agreement. And then you go forward and get the returns done, get your bookkeeping up to date, and check if you need for estimates. And we put you on estimates. So that 1 year that you owed, that's just going to go on an installment agreement. And that way it'll get you compliant, and you can get out of the snowball effect that's going to happen by going every year at the last minute and having this huge bill and having the bill get bigger and bigger and bigger. So it basically is down to, you have to get everything up to date, bookkeeping, and then we get you on the installments based on the year that you owe. So there is a way out of it. It's going to be now of a process for the owner, the shareholder, the individual, to change the way he or she is doing something. So we can get you on the straight and narrow and be compliant and keep the IRS away from you.
All right,
and if you do get a bill, don't wait and throw it in the underwear drawer and wait to bring it into my office at the last possible minute when they're ready to levy you. As soon as you get the bill and you know you can't pay it, deal with it then.
Awesome, thank you. We have another question here. If I am a sole proprietor but have no employees, do I still need payroll to be an S Corp / elected to be taxed as an S Corp? Yes,
because what happens is if you're a DBA and you have no employees and you want to be elected as an S Corp, you are an employee, is a matter of fact. So you do need to go on as a W-2. If you don't, what happens is down the road, the IRS is going to take a look at it, and they're going to go and they're going to start investigating you, because the shareholder is supposed to be on a W-2. And they're supposed to go away what the IRS says, reasonable compensation for your field. So yeah, you do need to go on a W-2.
Cool, thank you. All right, this is the last question I have for now. So if anyone has any other questions, now would be the time to submit it, because if we don't have any when this question is finished, we'll assume that that's the end and we'll wrap things up. But for now, we do have this question, which is, how do we figure out what appropriate deductions are? Some of my friends deduct things I think they probably shouldn't. Is there a guideline?
Yes, there is guidelines. The big one, the umbrella one is called, is it reasonable and is it necessary? Some things they have that are not deductible. Like a lot of times, everyone loves to try to deduct work clothes. Okay, your casual jeans, you went to you went to Kohl's, you bought your Levi's because you need them, you're a contractor. The IRS is going to say, well, everybody's wearing jeans, kind of have to wear jeans, okay? We're not going to give it as a deduction. Everyone's going to wear a shirt until you embroider the shirt. And that's different because that's not something you're going to wear on a regular basis. So they have a list of things you can deduct. It changes for each industry a little bit. I'll give you some examples. So another one is I have a couple individuals who are actual fighters. Okay, they go into the ring, they box. In this case, in most cases, you're not going to be able to deduct the chiropractor and massage and the other things they deduct because it's all maintenance on their bodies. In this case, I do deduct it because they need it because they're physically demanding, they're getting into a fight, they need it to continue fighting. Okay, so there is a fine line and it does change for that. So with the fighters, I deduct the chiropractor, I deduct the massage and some of the other stuff we do because they're using their body to make a living versus me sitting at a desk. I'm not going to really, I'm not going to deduct the chiropractor because that's going to be a hard case to win with the IRS. Some of the things they really look at, and I'm not saying it's illegal, it's not illegal. Mileage is a big one. The car, the truck, that's a big one. They do look at that. It's not illegal to deduct it, but they have regulations and they have guidelines. Meals and entertainment, that's a hot button. Okay, it is completely legit. You just have to watch what you're doing. You know, if it's for you and the client, that's fine. But if it's just to go out and eat by yourself, it's not legit. I have represented a landscaper once, and I didn't do the return, thank God. And he was guessing. He guessed at everything, and they disallowed everything because he could not prove anything, including the mileage. So his bill ended up to be $60,000 because he couldn't prove anything, and he guessed it. All that stuff, if he kept track of it, completely legit. Mileage, meals, all would have been legit if he tracked it and kept track of everything. So it depends on what it is, I guess. It depends on the industry. And is it a good, can I defend it? Is it reasonable? Is it necessary? And those are the two things they're going to go by. So I don't know if I can give you a concrete example of certain things besides obvious things. Insurance, business insurance, completely legit. You know, rent for your office space, legit. Computer expenses and things like that there. When you have an office and you have all the utilities, that's completely fine. We'll go back to my contractor. The pool in his backyard, no, that's not legit, but we found it. He tried to deduct it, and they like adding those things in. And, you know, sometimes it's DUA. They're going to say it's DUA, deductible until audit. They're going to push their luck.
All right, thank you so much. At this time, we have no other questions, so I just want to say thank you to Scott for taking the time and providing this service to our members. We really, really appreciate it. For those of you who are still here, if you missed anything and want to recap it, be sure to check out our YouTube channel. Once again, we want to say thank you to Scott. Thank you to Thais for helping put this together, and we hope you will all join us for our next webinar.